We are ready to begin our next session now, a fireside chat with Ganesh Nayak on how global investors are looking at deep tech investments in India. Ganesh Nayak leads fundraising and capital markets at Avataar VC and has been deeply involved with the venture and startup ecosystem for several years across fundraising and institutional capital development. He has worked on capital formation initiatives for global venture funds, including Pioneer Fund, giving him a unique understanding of both Indian and global LP sentiment towards venture investing. At Avataar VC, Ganesh works closely with institutional investors and family offices focused on backing India's next generation of category-defining technology companies. I would like to invite Ganesh Nayak and Avijeet to begin the discussion.
Check, check. All right, so Ganesh and I know each other coincidentally since 2015, when I was raising capital for my own startup, Book Your Game. We went to a platform called Let's Venture, and Ganesh was heading investor relations and startup engagements at Let's Venture back then. Since then, he has also been part of my startup journey till 2019, till we had the exit. Ganesh now works at Avataar VC, which is also headed by Mohan, who was an investor in my startup. So a long way back, our relationship has been growing, and it's very pleasing to see that Avataar today is focusing on deep tech investments at growth stage. What we'll have today is a 15-20 minutes fire chat with Ganesh. I think he brings a lot of value, a lot of experience in raising global capital, so global LPs who invest in Indian venture capital funds. And our goal for the fireside chat is to try to extract what they think about Indian deep tech and how Indian deep tech compares with global markets.
Before that, Avi, congratulations on building out the platform. I think what you guys have built right from the initial Veda syndicate to now, you've built a full-fledged platform across the different opportunity sets. So you're still an entrepreneur at heart. You've built this platform ahead of the market. So congratulations.
Thanks, Ganesh, a lot. All right, so I'll start off with a very I'd say the question that a lot of people had, right? So Avataar raised a $400 million fund, and also there's a focus area for deep tech to invest in, right? How did you guys convince the global LPs to take a bet on Indian deep tech, especially given you don't have proof points? You're one of the first growth funds who have taken a stance that we will have an exposure to deep tech. What was the conversation like? Did it involve a lot of convincing? Were they already on board? Just walk us through in terms of what was your experience and what did it actually take for a growth fund to raise capital from global LPs with a certain focus to deep tech?
Sure. So when we look at global capital allocators, right? They allocate capital from a top-down perspective, right? And typically, they would need some kind of a track record to back, or they need conviction in a secular trend, right, that they believe in. So if you look at India, there is, I would say, a lack of track record for them to back in terms of large outcomes, right? Probably one green shoot is space, right, where you have the ISRO heritage, and now you have Skyroot. And I'm sure that Agnikul and others in the ecosystem will also attract global capital in the near future. I think we need to replicate that across more such opportunity sets. But to answer your question, look, there's a lot of education that we'll have to provide to global capital. And that includes taking them to actual companies. So that's what we invested in quite early on, right? So to some extent, we leverage our track record, right? We have invested capital and given good returns, distributed back capital. So we leverage that track record and then transmit that into new themes that we are seeing opportunity in. But before we actually ask for capital, we show them companies. So we did a lot of roundtables around space tech, quantum, advanced manufacturing, where we had Indian entrepreneurs. We also got founders from the US. We got fund managers from the US, as well as some select fund managers in India. And we created a conversation for them to see the holistic picture, right? Otherwise, most global LPs are, just looking at desktop research. Maybe they make a quick visit. It's usually between the airport and different hotel lobbies, right? So we want to take them, to companies, and that's where I think all of us have to do a good sales job. Early stage funds, growth funds, as well as I would say the ecosystem as a whole.
Nice, yeah. And like one of the things that we always face when we were talking to LPs was, what is Indian deep tech? Like, is there enough innovation? We don't have enough patents filed. How does this compare with the US deep tech ecosystem, Israeli deep tech ecosystem? It's very interesting that global LPs have the right perspective because they can invest in all of these different markets. Was like, how would they evaluate India versus US in terms of an investment product, right, into deep tech? Like, any insights around that?
So, look, global LP does not have to invest in India, right? So, they have an option to invest wherever they wish to. And I think what can trigger them to allocate to India is two things, right? One is you get them into sectors where you have some kind of a secular trend, right? So, for example, currently, I think there's a wave of sovereignty across the globe, right? And beyond US and China, India is, I would say, the third country that can have platforms that have the sovereign angle going for it, like the national quantum vision or the space technology ecosystem. So I would say that would be the leading thesis for a lot of global capital to start looking at allocating to India based on the thesis that there is a sovereign angle to allocating capital here. Right? And that we are seeing in, let's say, spaces like advanced manufacturing, where there are a lot of workloads like aerospace or semiconductor, medical devices from the West doesn't want to go to China. It's looking for a different geography, and that can be a secular theme that we can leverage. So I would say probably the themes will come first, and then the track record needs to back it up very quickly for that capital to start flowing into India in a bigger way.
Absolutely. Yeah, no, I think that's good to hear that the Indian sovereign story is also appreciated at the global level. Has there been any concern in terms of depth of exits for deep tech in India? Like, I don't think there's any deep tech company which has shown the full cycle yet. And also, Indian public markets versus US public markets, generally, we have seen IPOs at 1.75 trillion with SpaceX and Anthropic and whatnot, and Indian public markets have nearly not funded deep tech much. So how are the exit conversations, the validation on the new theme that we are kind of pitching to those guys?
Look, I think it's not validated, and it will not be validated until you show exits, right? So the way at least we look at this is we blend it. In our portfolio, right, we do invest in assets that have a exit horizon of, let's say, 3 to 5 years, right? And that would be, let's say, 50-60% of our capital deployed. And then we blend that in with deep tech investments that may need, let's say, 6 to 7 years. But still, we're not investing, predicting an exit event, right? We are investing, predicting the upswing that the asset will produce. So we are also, in some sense, taking the exit risk, right? I can't tell that it's de-risked yet, but we blend it into a portfolio so that for our investors, they have clarity on where the distributions will come and where we need to kind of work towards mitigating that risk.
Right.
But having said that, I think the Indian capital markets have evolved, right? Before 2020, there was a huge doubt on exits for all the platform companies, right? Yep. Like the Zomatos of the world, right? And today you see them trading, very well on the Indian markets. So I think we don't need to necessarily solve for that now. I think we need to solve for growth capital. right? We need to solve for companies to get $100 million rounds so that they're able to build large outcomes, and then the exit is probably is something that we need to solve. But in deep tech, our general internal view is that that the gestation periods are getting compressed, right? Because of new technologies and also I would say market forces coming in. So I think as soon as you get your business going, right, after you hit TRL 7, 8, you got to get that revenue and profitability address, and then exits will be an outcome of that, right?
Yep.
So I would say focus should be more on growth stories, showcase some of our companies which have that commercial capability. And at least what we are underwriting is every investment we make when we deploy typically 20 to 25 million per investment. So we need our companies to have a path to at least 100 million of revenue, right? Even though when we're entering, they may be sub 10 million, like 100 to 200 million revenue should be visible. That's what I think we should solve for today. How do we help our deep tech champions like really become scaled assets? And then exit paths, there'll be multiple. And that's something that will sort itself out as long as you build a good business.
Absolutely. And, just to kind of, just hitting on that point, right? Once deep tech companies actually commercialize, what we have also seen in our portfolio is the fundamentals look very beautiful, right? You have 80-90% gross margin, you have positive free cash flow. And like looking at the previous 2 decades, like which sector or which startup at Series A would be EBITDA positive? I mean, you look at the consumer internet market, they would be burning cash till like Series D, Series E. So I think something that gives me confidence is maybe the capital required at growth stage in deep tech is actually lower than what we needed in SaaS and consumer internet of the previous 2 decades. So maybe that kind of solves a lot of the issues on exits.
I'll just add, right? I think you're right in a way, right? One of the global LPs that we were speaking to, they contrasted the billions that were burnt to build these quick commerce platforms, right? If that same capital is deployed into IP-led companies, right? The defensibility of those investments will actually be higher. But having said that, I think the other constraint is talent, right? So I think India needs to build companies which has enough talent density. That's another important aspect, because you do have a lot of Indians who want to go work in the large firms in the US.
Yep.
Most of them do their higher studies in the US, right? So that's another aspect. It's not just capital, but you also need to have, because the true moat is that, right? The true moat is, do you have enough technical depth that you are able to hire and sustain within your firm? Yeah. I think that is also an important aspect, and it's great to see a lot of seed funds help those entrepreneurial technical talent get started, right? And then I think at least what we are seeing is talent is looking at earning equity in startups, right? They're getting attracted to that. So the same cycle we saw, let's say 10 years ago, in the upstarts then is now happening in deep tech.
Yeah. And an anecdote on that is, so the whole aerospace component manufacturing space, we have a portfolio company there. Most of them got paid literally peanuts with no equity for the past 20 years, extremely talented engineering folks. And just providing ESOPs is allowing them to hire top talent out of Tassel, Mahindra Aerospace, Dynamatics. And so, having that startup approach of distributing wealth across your top talent, and that's really kind of helping deep tech companies hire. But I think the talent bottleneck is real. Like, I think we need more professors, more academicians, more PhD researchers to come in. And it's also heartening to see that if we fund enough companies, you guys would fund a few of them, and we can hopefully build the ecosystem larger. Couple of things on Avataar itself, right? What are the couple of 2 spaces that you guys are most excited about, where maybe you have made an investment, and then what are the few spaces that you would like to stay away from?
So from our perspective, our usual trigger to invest is when a company has got their commercialization going, right? So one of our early thesis was India will do well in physical AI, right? So, we have invested in two companies who are both physical AI companies that go after the real world use cases, right? So there's one company called Intangles. They do fleet intelligence. So they've built a sophisticated model for predictive maintenance of trucking fleets, right? And they've got 22 patents. They have about 18 PhDs. So they've really built world-class solutions, and they're winning large customers in the US, right? So I would say we started off with that. We have another company called Infinite Uptime that does something similar for heavy industries, like cement plants, chemical plants, and so on, right? Both the founders are PhDs from the US, but came back, built a company, right? So we are seeing that physical AI is one thesis where we think Indian entrepreneurs have an advantage, because in India you have data entropy, as they call, right? You have all the different conditions, all the chaos to train your physical AI model well, and it's usually a solution that you need to deliver. So you need domain knowledge, implementation, customer service that goes into it. So I would say that was our first lean into deep tech about 2 years back. Post that, we have done investments in advanced manufacturing. We just announced an investment in Ethereal Machines that has developed its own in-house 5-axis CNC machines, and focused on serving aerospace, semiconductor, medical devices, etc. And then we have also invested in quantum. So again, the sovereign thesis, right? I think every large nation will want to have sovereign capabilities in quantum. There are many scenarios where you can be caught completely off guard in the post-quantum world. So I think the Indian National Quantum Mission has been quite vocal about supporting the ecosystem, and we invested in QPI, which is India's first quantum computing company, and we are helping them expand by winning global contracts. So I would say, these are the three theses where we have invested, and we will continue to invest. And we are very closely looking at, space tech. We're looking at material science. We have a very open-minded Avataar. I think for us, it's really about, can we get to that stage of commercialization? And also, we like to be a value-add investor. So we have a 20-member operating team across US, Europe, as well as Middle East. So we typically start getting engaged with companies slightly earlier before we look at an investment decision. We start understanding whether our global operating platform can help companies with interacting with enterprises that could become customers. We start helping them benchmark themselves globally. We have deep relationships with about 10 funds in the US. So we do all of that thematic work. We do these round tables where we bring Indian founders, US founders, Indian funds, US funds. We get that conversation going. And that helps us identify entrepreneurs that we can partner with, and also helps entrepreneurs identify what Avataar can offer. So we typically have a long process before we pull the trigger, but we make it a useful process for all parties. So having said that, we are doing this across multiple themes, and we would love to do more with Shastra VC, right, across the different themes that you are investing in, and at the right time, come in with our capital and also our global network.
Yeah, and what's the area that you are staying away from in deep tech? Are there certain pockets that you feel is overcrowded?
Yeah, I'll start with the easiest one, which is defense. So we are 100% funded by global institutional capital, and they would not be able to deploy in defense. This capital is from US, Europe, Japan, etc. So there are sensitivities because of which we cannot invest, unfortunately, in defense tech. So that's one, right? The other would be, I would say, look, we still want to invest in companies that are capital efficient, right? So we will look for companies that need 100, 200, maybe 250 million of total investment to become viable, profitable businesses, right? That's been our focus. It's not a hard requirement, but that would be our preference, right? Because remember that we are a growth stage fund. Like we make maybe 15 investments in a fund, and we want to invest in as many deep tech companies as possible, and we want to have a track record that enables us to do more, right? We think that the pipeline for deep tech in India will keep increasing.
Yeah.
And in fact, at some point in time, it's going to become the real source of value creation in private markets, the same way it has become in the US, right? If you look at all the trillion-dollar companies, they didn't have any revenue for the first several years, right?
Yeah.
They raised $1 billion before they had a single dollar of revenue. Like SpaceX, look at the labs, OpenAI, Anthropic. I mean, there was no business model.
Yeah.
So to be able to get that level of risk capital mobilized, you need to first, have a track record.
Yeah.
So I think that's what, at least from our perspective, we want to establish at Avataar. And for that, we need to have capital efficient companies that delivers that flywheel, and that allows us as well as the ecosystem to start, taking more risk.
Got it.
All right. So we want to be cognizant of, not investing in projects that need billions of dollars to become viable, and then we'll all be stuck or
Yeah.
potentially stuck, right? So we don't want to take that risk.
True, yeah. If there's one thing that you would wish to happen over the next 5 years to help our portfolio, help the overall deep tech ecosystem, what would you wish for?
I think now we have reached a stage where we'll have to get commercialization on fast track, right? So I think the government is doing its bit, right?
Yep.
They are becoming customers, but we'll have to really get a more dynamic mechanism to get industry, right? Indian large companies to become customers.
Yep.
I think there's a lot of potential there that we have not really, I would say, thought through, right? How do we do that?
But,
Today it's
but one
very
way of
random.
doing that is opening up your fund for Indian promoters to invest, which you guys have not done since. So
Yeah, so I
maybe
think
that's
we would actually love to do that. So we do want to have a Indian arm. Unfortunately, like most of our, I would say 60% of our current portfolio companies are still domiciled outside of India. So that's really our constraint from accepting capital in India. But that is something that we are working on solving as we speak, right? So, but I think more fundamentally, we need to have Indian companies, start giving pilots, right? They need to start engaging with Indian startups and become customer. I think that is something that there's a lot of potential that we have not yet tapped, and also how do we incentivize a talent pool, right? I think while it's beginning, I think there still needs to be far more entrepreneurial energy, right? We need to attract all our talent back from wherever they are globally, from the US, Europe, as well as how do we get some of the founder liquidity, employee liquidity going in deep tech as well. I think that will really be the trigger for a flourish of startup activity.
Yeah, no, absolutely. We can probably open up for a question from the audience if anyone would like to ask. Yeah.
Thank you. Hi, I'm Kapil from Kashville Capital. Good to know that your company is quite sector agnostic, and your GPs are not looking at defense for now. But my question is specifically on the defense sector, as a lot of investment has been happening in India, specifically in this sector. How do you see defense going up? Because obviously for the last few years, there have been unpleasant news all over, because of which the sector has spiked up. But how do you see this sector going ahead? Because there are a lot of companies into it, whether it is drones, whether it is missiles, or whether it is allied instruments and equipments. But how do you see this sector going ahead? Because ultimately, the biggest buyer is the government. Margins are wafer thin. Payments are delayed. So from a global picture, from a long-term picture, how do you see this?
Yeah, look, I'm not an expert in defense, to be fair. That's an area where we will not be investing. But having said that, I think it's going back to the geopolitical environment that we are in, right? So it is imperative for at least large nations to have sovereign control on certain capabilities, and this is one of them, right? We have been dependent on foreign technology and foreign imports, and I think for a nation of India's size, right? I think we need to really come up to speed on capability. So that's at a national sovereign level, right? I can't really comment at a company level because it really depends. Every company goes into this space knowing all the risks involved and the dynamics. I think the government has come out and given a supportive stance to the extent that they can. They're procuring directly, from upstarts as well. So look, it's part of the package, right? The dynamics in defense is what it is. I don't think you can wish it away. And if you still have entrepreneurs and investors who are willing to play that thesis, you'll have to go with eyes wide open, right? That's the limited point I would have on this topic.
So defense is clearly a key focus area for us at Shastra. And one of the key things that we primarily look into while making investments in defense, right? So there are two types of companies which succeed in defense. One is the high volume, wafer thin margin, capital funded, amazing connections, large conglomerates who have been operating for years and who will continue to operate for years, right? That business model will continue because that's the scale model. The other business model, which is because of all the things which have happened over the past 10 years, right from your IDEX program, Aditi program, the IDDD, which is Indian Defense Procurement, there's so many structural changes which have happened to enable innovation to help us indigenize, right? Not just licensing technology from outside and creating a capital play, but actually building products in India which can replace an import service. And like for example, our defense companies, if you look at Tactrix, replaces an Israeli import at half the price what India procured from Israel at an 80% gross margin. Because at the end, deep tech or IP-driven businesses, your cost is the knowledge that you bring in, right? Your cost is the R&D that you put in. Post that, the pricing power is what you charge, and global players have been charging us 95% margin for the past 20 years on a lot of these high technical. So I think there is a play for private capital, venture capital to invest in defense in areas where you can clearly prove technological advantage, technological competency, where even building it in India, we can cut the pricing for India imports by almost 50%. At the same time, because we have very strong IP, we are still able to make 70-80% margin on that, right? And I think that's where we like to invest. And that's where we think startups will have a right to win versus generally kind of chasing any contract in defense.
Yeah, maybe just to add, right? I think most of these companies will have IP that could have a dual use, right? So I think it's not that there is no value just because the customer is government and it can be challenging. The IP itself can be valued, right? And I'm sure that's one of the aspects that you have to look at.
All right, thanks Ganesh a lot for your time. We'll break for lunch after this. Thank you so much for spending the time, and happy to host you here. And yeah, sure.
All right.
Here's a small token of appreciation from us.
Thank you.
Thank you. Yeah. I would also like just to take 5 minutes of the stage time to share a token of appreciation for our advisory board member. If Mr. Jairam is here, I would like to present him a small token of appreciation. Yeah. Hi, Mr. Jairam. Yeah. Thank you so much for spending 2-3 hours a month with us to advise us on how to build the AMC business. I think if the audience does not know, Mr. Jairam has been instrumental in building the Kotak AMC franchisee, the Kotak Securities franchisee, and we really appreciate the time that you give us. And this is a small token of appreciation. Thank you so much. Thank you so much. All right. Thank you. I think So we can break for lunch here. We'll try to squeeze the timelines a little bit so that we can start with the portfolio presentations. Post lunch, we'll have 7 or 8 portfolio presentations back to back. Very interesting companies who have built technology at the global scale. We'll start with Alt Carbon at roughly around 2:15 p.m. And this will be 15 minutes every portfolio company.